Okay, so the recording is starting now. Welcome everyone to our fireside chat, where we would like to talk about building in Web2 versus building in Web3. And I'm very proud to have two fantastic female founders. One from the Web2 world, which is Tanja Morsch, and from WeekOne, and one from the Web3 world, Rand Alkharashi. She's from Quintes, so she built Quintes. And we are very proud to have this conversation like a fireside chat this evening. And I just want to mention this is a series that we are doing alongside our virtual phase from the Trust and Pay Hackathon as a means to prepare our participants what it means to found, because maybe there will be already some founders, startup teams, but maybe there are also some students, entrepreneurs who are looking into founding startups. So we would like to share your insights, and we're really happy to have you here. And yeah, I'm Sabrina, CPO at W3FF, and we are organizing this hackathon next week already. So we will see each other in Riyadh and also online. So now let me introduce Tanja and Rand to you, two amazing founders. And I'm also very, very happy, and I cannot emphasize enough that we need more female founders in the tech space. And yeah, now please get it started. Tanja, I would like to just let you start with, I need my briefing. I don't have my briefing in front of me, so therefore I'm not yet aligned with the questions that I shared with you.
But we can start with a small introduction. So that's actually the beginning.
Exactly. I don't know if I prepared a question for that, but yeah, please get it started. Make an introduction.
Okay. Yes. So hi, everybody. So I'm Tanja from Germany, and I have founded this company, which takes care of employee onboarding. So what I take care of is that trust and employee engagement happens already in the onboarding phase. And I amplify this with AI and do both markets, Germany and Saudi Arabia. So happy to be together with you here with Tanja and Sabrina. I was already at the WeekOne conference last year. And Rand, I met last week already. We exchanged about our two startups, and happy to have you all here, Gada, Lama, and Imad. Happy to answer your questions.
Thank you, Tanja. And Rand already was part of our kickoff for the hackathon. She was part of also a panel discussion there and shared her insights. I think it was regarding Web3 and trust and etc. But now we would like to hear more about the founder journey. So please, Rand, also introduction from your side.
Hello, everyone, and thank you for hosting me and organizing this great session. My name is Rand Alkharashi. I am the co-founder of Quintes Protocol and Kitabic Research Lab. I do cryptonomic research and architecture, and what we do at Quintes is solving one of the biggest inefficiencies in the market. Simply, Web3 and crypto is filled with a lot of volatility and has plenty of yield and hype, but institutions and retail investors need predictability and good returns that are combined with maybe more risk adjusted returns and risk mitigation measures. And what we do is that we reduce uncertainty by designing a system where trust and transparency and risk management are native, not something that we add as feature but a whole system that combine ethical earning with transparency.
I hope we can dive deeper into that later, because I think this is, let's say, each of your projects are super, super valuable and also interesting. And I have also more questions regarding that. But what we would like to focus now is also the founder journey, and also what is, let's say, what are patterns between Web2 and Web3 companies. And maybe I would like to just quickly share who is maybe new to Web3 or didn't hear about that before. So Web2, we call the world, let's say, in which we are now, where we have digital economy. We have, let's say, we are calling defining the web how it is, that it's interactive. We can buy, we can interact on both sides, and e-commerce. So Web3 is that we also own, and there's a big economy behind, and what Rand just shared with us around the volatility. So there is also economic part involved. So you heard for sure about crypto. So Web3 is, let's say, the world how where we also own, not only interact and can buy and read and talk with each other and digitally interact, but also where we own a piece, a digital piece, and that also has a monetary value included. So I just wanted to highlight that. And there are different, so why it's super interesting, because in Web2, how we build is a little bit different, also specifically maybe go to market and how we interact with the users, with the customers. And in Web3, this is a more community oriented. It's a different way how to go to market, but also how to interact with the users. And I would love to use, let's say, patterns and experiences that are similar, because they are, you struggle in both worlds. Where are they similar, but also where are they different, and where founding is a different journey. With that, I would like to just ask you, not about the differences, but I would love to understand now at the beginning, what was the biggest mindset shift that you you had to make as a founder? So when you started, you had a different perspective, and then there was a big shift throughout your journey. Tanja, do you want to start?
Yeah, thank you, Sabrina. So for me, the biggest mind shift was coming. So actually, I just changed last year and became founder. So I'm brand new to the startup business. And my biggest mind shift was how important is the founder brand. So before I was employee, yes, I was also in a management board and for a scale up responsible for HR. But I was still an employee. And with an employee, you don't, let's say, you identify yourself with the company. Once you're owner, it's completely different, because it's my baby now. And what I underestimated, how important the founder brand is. And at that time, I was lucky to read the book Founder Brand. It's a yellow book, really cool.
Okay.
If you want to go the founder journey, I recommend it to read to everybody. And it shows nicely how important it is and how you can build up this brand. And I did this naturally via LinkedIn, and which was the biggest mind shift for me, is that this founder brand is actually my business card into whatever it is, ecosystem, talking to people, because they look at my LinkedIn profile first and look whether I'm credible. And this is why my shift was, how do I build on this brand and how do I live this brand?
That's interesting. And I know you have your purple fingernails, right?
Yes.
Which is the same color to the brand, and also do a lot of LinkedIn post. Yeah, I know we interact as well, so I know about that. Yeah, thanks for sharing. Rand, what about you? What was your biggest mindset shift?
Yeah, indeed, I think what Tanya just mentioned is absolutely real. Founder brand is important, not just optional. But there are obviously other, let's say, wake-up calls that we've had. Over the past 2 years and plus, we've done extensive research and built very strong team of researchers and data scientists, and held hundreds of conversations with users, allocators, and LPs who will be using the product. And what we've realized is that in the recent years, most of the liquidity and capital that goes to funds, whether that's liquid asset managers or VCs, it's literally following not the yield or returns necessarily, but it's following the trust, right? So liquidity follows trust always, whether that it's a liquid fund or a VC or a project or a company or a startup. Liquidity always follows trust rather than the yield or the returns, okay? And that's also where the founder brand comes into play, because the founder brand, the more visible they are, the more trust that they build, and the more likely people will be using the product, investors investing in the product, etc. And then, yeah, also we realized that most of the current TVL, there's around $200+ billion worth of TVL in DeFi, which is decentralized finance.
Could you quickly explain TVL for our participants who might not know?
So TVL stands for Total Value Locked, and Total Value Locked is the amount of money deposited into a specific application. And the beauty about decentralized finance, unlike traditional financial applications that you use, or let's say the bank on your phone, is that it's very transparent. Things are on the blockchain. It means that you can verify every single bit of detail, whether that's the transactions or how much money is deposited there. And then this gives so much comfort to the user, and to the partners, that they know exactly what's behind the scene and how the engine is running. And we were speaking about the TVL today. There is around $200 billion in plus, mostly consisting of digital assets, stablecoins, Bitcoin, Ethereum, and others. There is around 33 billion of real-world assets, and then I will touch base on real-world asset later on. But the truth is that most of that is not coming from retail investors, but it's coming from institutions, meaning it's not coming from that investor who has $5,000 or $50,000 or $100,000 into their portfolio, but it's mostly coming from those VCs and LPs that already have like maybe millions of dollars that they're managing. And then they would be deploying 2 million, 3 million in each application or each investment strategy. I think there's a lot of lessons that we've learned for sure, and mindset shifts. But if there's one thing that people in any industry can go with for sure, is that ideas are cheap, but teams are what is important. Okay, so if you're thinking of building your company, don't really think so much of the idea. Go and find the A players, go and find the right people to build it. And that's really how companies are built. It's people. Of course, ideas matter, but it's not, it doesn't matter as much as the people.
Yeah, thanks for sharing that. I also would love to understand, because we were talking about a brand as a founder. To what extent, because you are both female founders, to what extent this was something that helped you or hampered your journey? So how is the female aspect, or that you are a woman in a tech environment? Tech, you are in HR tech, Tanja, Rand, you are even in blockchain, where are even less women. to what extent this was a factor, how this played in. Tanja.
Yeah, I can say it's an advantage because you're at some kind an outlier. And for this special breed, so to say, we also get special attention. So let's take a sample. I was just last week in Berlin and pitched in front of female investors in Berlin. So there's a special club only for female investors, and they want to see and support only female female founders. And I love the community. I have a local partner in Saudi, and we're just like sisters because we share the same thoughts, the same thinking, and the same how we approach a company. And it's also in terms of my co-founders, we are all equal and respect ourselves and each other. And it's a great mixture. If it would be only men or only women, probably it's boring or too one-sided. But let's say I had last week also a wonderful incident where my co-founder said, "Hey, Tanja, let's do it like this way." And I'm like, okay, I would have asked for permission, but I mean, he's a man, he's just doing it. So I loved also the interaction where we bring the best actually to the team.
Sounds great. Thank you. Rand, what about you? What about your experience?
I think it was a real pleasure, and it's a good experience for sure. As Tanja mentioned, like there is actually advantage because, and actually this is backed by like research. One of my advisors once shared with me a research that states in male-dominated industries, when there are females that are building like working, they get more potential to be heard and listened to and getting like insights and advice from, rather than male, because the space is just so much filled with males, right? But when there is a woman, it shows that, okay, this person actually knows what they're doing. We need to listen to that person. And it's actually not just a theoretical thing. It was a study. So before that, I was also asking the same thing, because a lot of people ask me the same question, Sabrina. This is not the first time that you've asked me. A lot of people ask me, and the truth is that I've always had people respecting at all time. And I'm grateful for that. But I've never really tried to be on the other side, right? So that's the thing that we really cannot tell. How does that look like on the other side? Because I think like there could be a difference. I don't know. At the end of the day, I think like also like when female, I think females kind of fit together more when they're speaking with each other than when they're speaking with males, if that makes sense, right? So yeah, I haven't tried it the other way around, but I believe that there is not much a difference, and in fact it's been an advantage, full of respect, and like yeah.
Okay, so thanks for sharing that. So I'm also leading a female blockchain community, and we especially, so my experience there is that women don't dare to speak up that much, but that is also, I'm talking now about in general, let's say women in tech. If you are a founder, I think then again, it's another story, because if you are a founder, you already dare to, you already take a risk. So I think then it's maybe also a bit different, but we need more female founder, and we need more female in tech. So I'm really glad that you are here, that you exist, that you are doing what you're doing. So thank you for that. Let me continue with let's say a bit the founder journey.
Also for setting this up, because really, because inspiration is one of the strongest powers and it has so
Yes,
much impact. And I think like one of the most contributing factors for people who make it is that because they see other people making it, this encourages them and tell them that, hey, if they could make it, it means that I can make it as well. So
exactly. Yes.
yeah.
Absolutely. Yeah. And also mentorship, this is also where the community that I'm leading is coming from a mentorship program. I think mentoring other younger women is also a superpower because they get even, more empowerment through the not only seeing, but also having the opportunity to access your insights, your experience, also seeing or getting. I think this is also something that usually you share as a mentor to a mentee, that you also struggle sometimes, that you also started somewhere, when you weren't already that far and that knowledgeable. And so sharing that, I think, gives them a sense of belonging and a sense of, yeah, maybe I can do it too. So, and more courage. Yeah. So I also would like to touch upon failure. So from different perspectives. So failure is really something that we need to embrace as founders, and especially when you when you're in this founder journey, probably you have to have many failures with your product because you need to test and it's never perfect. So there are failures. Let's say there's a lot of learning. So maybe we don't talk about failures, but learnings. But also there is there's the culture in the innovation scene about failure culture. So we need to fail fast to learn from and to continue and to grow and to iterate. But also, especially in Germany, we have this fear of failure. So that comes from this approach of perfection. So we want to create everything that is perfect. We don't want to show anything which is not perfect to the customer. So also from my practice and with testing, etc., there is a big barrier. So just let me ask you, what was a real failure that you experienced as a founder, and maybe what power came through that? So maybe you can share that to share that failing is not really a failure, is not a weakness, but it's a power. Maybe Rand, do you want to start?
Yeah, that's a good question. And for sure, I think there's no journey or company that could be built with like a straight line and everything is perfect. That's very normal. But one of the things that perhaps we have encountered initially is that we initially assumed users would immediately grasp the value of our system and understand it deeply, but they didn't. The complexity was the barrier. Not a feature. And we shifted, we now build for clarity and adoption, not just for really complex and very robust system. So we changed our positioning, we published more articles, we have changed our tone, and those things led to good impact or changes. So it's very normal, actually. You never build a startup and then from the first day you know the full plan and roadmap. You really need to test things out, right? You need to experiment. And the most important feature for founders isn't necessarily to be a very expert in everything and having the answers of every single thing, but to change fast and to adapt based on feedback. When something doesn't work well, for example, changing the idea or messaging or whatever the source of the problem is. Is it user adoption? Is it go-to-market? Is it getting in more users or like clients? Moving fast is important. And maybe another one is maybe having very big team. It's not a big failure, but you know, it made us a little bit slow, quite fragmented, and yeah, I was so much busy on many different things and things that may necessarily not be very important to move things forward. They're important, but not that much urgent, right? So yeah, those are the most, I would say. I'll give Tanja the mic.
Thank you, Rand.
Thank you.
Yeah, I fully agree with what you were just sharing. So for me, on top there was this sales ambition, so to say, because of course, as founder, you always get the imagination that everybody wants to have your product, and it's super easy to sell because you get all these unicorn stories, and forgot about the statistic that out of 10 startups, 9 will fail. And so my expectation was also like, okay, good, I will close a deal within the first 6 months in Saudi Arabia, which of course was fully off because, first of all, I need to do market entry, which takes usually 1 year until people know you. And that's regardless whether I'm in Saudi Arabia, outside of Saudi Arabia, or in Germany. So people first need to get to know you. So just the first year is only market validation. People get to know you. What Rand also said at the beginning, building your founder brand and building your trust that people actually give you interviews or give you prospect meetings. And then actually in the second year, you can start harvesting what you have built in the first year. And I think that was my biggest learning. And I was already nervous and said, okay, I need to shift the use case. I need to shift the positioning. But fortunately, we had very good advisors who told me, no, Tanja, don't change anything yet. That's super normal. It's the first year. Stick with your positioning. And the first customer is never easy.
Thank you for sharing that. Yeah, sounds hard, but yeah, thanks for sharing. I hope no one will be, let's say, will still be encouraged to do it anyway. It's just knowing and having, let's say, expectation management. On the other hand side, maybe it's also better not to know everything in advance. Sometimes it's better just being in this journey and then discovering things.
I think it's the question of how, maybe I can add there something. The question is, how do you define success? So I actually had this discussion just with my co-founder last week, because he was like, he got nervous and said, Tanja, we have not reached the sales targets, what we wanted to do. And I said, yeah, but define success. From which part is it? The success is we did a complete market entry in Saudi Arabia. Which prospects we already got. We got really impressive meetings, which usually you would not be able to access the people. And this is building the pipeline was the goal. So actually our expectations were wrongly set because we only were referencing to the unicorn stories. So I think this is also something I would like to share and give you today with you. Just set your own expectations and maybe sometimes recalibrate them, because then it becomes a learning, or what you said, Sabrina, sometimes founders get frustrated very quickly, which is for me absolutely not the case. I'm fully motivated. And I think that's also the very, very important skill, to be resilient and always look at the positive side and recalibrate expectations.
Yeah, I think that's also a very interesting perspective that you shared, and that you shared having this maybe also a difficult discussion with co-founders or a co-founder, because there are different expectations. And yeah, I think this is also not an easy part to align. I don't know, Rand, do you also have co-founded? Do you also have this experience?
Where we've, set expectations high
Yeah, that expectations are
Absolutely.
different. Yeah.
Yeah, absolutely. I mean, what she said is 100% right. And this is something that I see all founders do. And it's very, very normal. A lot of people just have high ambitions, and then they build some targets based on data. As you mentioned, they also look for examples like unicorns, and then you set expectations, but then suddenly those expectations aren't met because of X and Y and Z, and something happened, right? So you always need to set expectations, but at the same time, recalibrate it. At the same time, you want to have your plan B and plan C, where if that expectation doesn't happen, what will I do? This is the real game. This is how to actually do it, even if the expectation didn't work out, or let's say, recalibration even didn't work. So you want to hedge yourself a little bit and mitigate some risks by setting plan B, plan C, and maybe also being a little bit more realistic with expectations. So you mitigate risks.
Do you have a story, Rand? Because you were talking about plan B, plan C. Did you apply a plan B? So were you at a specific point where you said, okay, plan A is not working anymore, I need plan B? Was there a moment?
A lot of times. Yeah.
Okay.
Yeah, a lot of times.
Want to share one with us?
Huh?
Do you want to share one with us?
Okay, well, where can I start from? Maybe I think we did it a lot with many different things. With our go-to-market, with our development. Okay, with our development, we plan to go out with one partner to get the development ready and done in an X speed, but we then shifted to another development partner. And then another thing is maybe fundraising as well. We plan to raise from specific investors, but then we realized that, well, we can actually raise in another way, which can be more efficient. And if we have used that initially, it would be much better. At the same time, maybe some founders would say, I'm going to start raising now, and then maybe in 2 months I'll close the round, because they saw multiple other projects done this. But it doesn't necessarily have to happen. So founders need to also manage their runway very well, right? Some people set high expectations that, okay, I'm going to have an upcoming round. And that happens a lot to many different founders, specifically founders that achieved traction already, got many different users and clients, and already positive amount of revenue. They will say, okay, I do have this amount of runway, and I'm going to be raising my Series A or Series, I don't know, in 2 months or 3 months. I expect to close it very fast, and then they will be using their runway completely. Then 2 months pass away, and then they're trying to raise, they couldn't because of, I don't know, market conditions, investors, some new market trends, and they cannot raise. So now they've got a little bit tight on their runway. They might need to fire people, change things. So being very cautious on this point as well is important. You always need to set plan B and plan C and know that there is high chance that maybe like expectations are not met, because that's very normal. Like, this is how the game is played.
Thank you. Thanks for sharing. Tanja, was there also a moment where you had to activate plan B? You just shared that you had the expectation it would work faster with the market entry, but was there anything in the past any other moment where you said, okay, now we pivot, or now we have to take plan B?
So actually, we did not do a complete shift yet, but I heard from other founders that this is totally normal. We only did, let's say, 2 major shifts in the go-to-market approach, meaning we looked at what is our primary market. So actually, our primary market is Saudi Arabia, because we said, okay, in Germany and Europe, it's more consolidation phase. So we are selling there more offboarding scenarios than onboarding. And in Saudi Arabia, it's really where we, as a product, have the biggest impact, where we can really give the customer a value, because they have so hyperscaling scenario in recruiting. Mm-hmm. And that was, first of all, I think the biggest shift to say, okay, we go to a market which is not next door, because we're Berlin based. It will cost us a lot of travel and a lot of trust in the market. Mm-hmm. And the second biggest shift last year was where we moved away from small and mid-sized business to the large enterprises, because mm-hmm. usually people say, oh, large enterprise, it's B2B sales, takes months until you can actually close a deal, which is true. Okay. But mm-hmm. for us, it's actually the ideal product market fit. So mm-hmm. this is where we found then, okay, we tried this out, and then we found, yes, this is our target group.
Mm-hmm. Let me just dive deeper into that. You just shared the shift from, or let's say, go-to-market shift, so Saudi Arabia as a market. Does that mean in the beginning your market was Germany? You wanted to address the German market with SME, if I understand correctly?
Yes, yeah.
Okay, and then you discovered. So how did you discover Saudi Arabia, the Saudi Arabian market? How did that happen that you did that shift?
Actually, because we did a big trial, let's say trial campaign last year, and then we analyzed where did these trials actually come from, and we took, interestingly, Egypt as a let's say trial version market, where we said, okay, we can easily get people convinced to join us, get their feedback, get early feedback on the product. And then we found out, interestingly, there were already trial customers from Saudi Arabia. And so we looked more into this one and into the market, educated ourselves more about the market potential, and then said, okay, yeah, let's shift it. And I think that was also a new, let's say, major shift in the German economy as well, which only kicked in drastically last year in January, February, where it became so transparent. Mm-hmm. And this is where we also said, okay, now it's the time to change the go-to-market approach.
Mm-hmm. It's also interesting to say offboarding in Germany, onboarding in
Saudi Arabia. I mean, I talk in Europe. I talk with incredible, let's say, also institutions, because they have not only offboarding for, let's say, because of consolidation, but maybe people go out because of age from their organization. So it's also interesting conversation, but slightly different.
Okay, good to know. So now going to you, Rand, regarding go-to-market. So in Web3, usually there is, it can be global, so depending on the product, but Web3 and blockchain is usually globally. But anyway, there need to be some sort of a jurisdiction, you have a headquarter, etc. So how does that work with your go-to-market approach with your market? You are incorporated in Saudi Arabia, but how does that work? Are you going from Saudi Arabia to, let's say, a specific market globally, or what is how is, with Web3, with this specific approach in that world, which is more global, how is that different from Web2, like a company, a startup like Tanja's WeekOne?
Great question, and thank you for asking. It really depends on the type of product, whether that's in Web3 or in Web2. and how regulators look at it, and like what does it mean to be actually usable by people in a set like jurisdiction. So for example, Quintes is incorporated in Singapore, but at the same time we do have an entity in Saudi Arabia. There are some activities that we do in Saudi Arabia and Singapore, but we cannot do in Saudi Arabia because of current regulatory frameworks. For example, we do build a technology platform, and that doesn't necessarily require a license. And if it doesn't require a license from a specific jurisdiction, it means that it can be accessed from people around the world, from any place. It's just like using, let's say, Instagram or Snapchat, right? You can use it in anywhere around the world. So it's an application that anyone can use it. And for us, we are very much close with regulators, as well as doing research from a legal perspective on any step that we make, specifically regarding product launches and anything that require license. We just go and take the license from specific jurisdiction that we're expanding in. But the beauty about decentralization is that it's a technology platform. You don't necessarily need to have a license from any, let's say, country, unless you do asset management or you are considered a company that do financial transactions or payments. So every type of company really require a specific structure. There is no one structure that fits everyone. So the best thing is that anyone who has an idea and has a specific market that they want to target, whether that's the global market or just their local market. For me, I see that most crypto projects are global, and that's the beauty of Web3. It's not unlike Web2. Once the product is built, it's just like globally accessible. You see people from all over the world using it. And for that, you need to have a specific legal structure in order to. Obviously, as a founder, you're not legal expert by design. So the best thing to do is to just ask a legal advisor or a lawyer, and then they will be doing the architecture or structure for how you best need to build your project in a safe way. But yeah, I mean, Saudi Arabia is actually opening up sandboxes, which is a very good move for tokenized assets specifically. And that's something we're actually working towards in Quintes. So keep your eyes open for updates. I mean, we will announce about in the future. But as of now, we are building for global vision.
Okay, thanks for sharing. I think so. So it's a different way to approach the market, like we have heard. Also, when we talk about market, we also talk about customers or users, however you call them. But let's talk about customers. So market means you sell to customer, or you interact. Your product will be used by someone. So in Web3, it's let's say, from my experience, a more community-driven interaction. So you build community. There's also a more, let's say, the user, the customer are more included. There's more conversation happening. There's more transparency, trust. Rand, you mentioned trust. In Web2, now we just heard from you, Tanja, enterprises, it takes months or even years that you close a deal. So you are talking to big enterprises or to companies. So it's a different way to interact. Maybe, Rand, do you want to just deep dive into that a bit and share how this approach to interact with the users and the customers is working in Web3 for you, for Quintes? Mm-hmm.
Yeah, for Quintes and how we interact with users, it's always making the community first and acknowledging their contributions and encouraging contributions, because we believe the best marketing team is never built internally. It's the external partners and users, token holders, who share the vision, who work on explaining what we're doing. Those believers actually create waves. And how we created this is by designing incentives effectively. There's big difference between Web3 and Web2 in that sense. It doesn't mean that Web2 companies cannot actually get benefit from that. I see a lot of different Web2 native companies that start to explore or experiment with incentive design in a way that encourage people to use their platforms. And that creates a huge impact. But from Quintes' perspective, we actually love to have the community building with us. And we encourage them to share ideas. We host programs or events online and offline. We share with them alpha or information that teach them. It's not just like use the product and that's it. They're part of something bigger. It's a mission, and it's a whole story that they need to share, and they're part of something very big and long term. And you know what? Bitcoin really didn't have a marketing department. I mean, it went from 0 to 2 billion,
Exactly.
2 trillion or something, a market capitalization. Why? Because of the community and believers. And the beauty about blockchain is that there's the network effect, that even if something's small, but people believed in it, the team behind it are strong, and they actually made a strong product that benefits a lot of people. The users, the community will start to pick it up. They will share the message, they will spread it out, and then it creates this snowball effect. And there are a lot of different things that can be done to make this more impactful or like more successful, including doing an airdrop campaign. And airdrop stands for...
Yes, exactly. This is what I would love to hear. An example so that the participants can understand what this incentivization or this designing with incentive, what that means. Airdrop. Yeah, please share that.
Of course. So the first thing is airdrop or incentive distribution. And what I mean by this is giving some sort of rewards, whether that's monetary rewards or other sort of incentives, to the users or early contributors of the platform after X amount of time that they have been using the platform or they have been contributing to it. With a simple loyalty program that the developer or the platform creator can set, they can monitor the users of the platform, where every user gets to have their own dashboard and measure, for example, how many points that they have collected based on the action that they've taken, whatever the platform that they're dealing with. And that's the beauty of it, is that it can be done on any platform to achieve any goal. This makes companies capable of building self-sustaining systems that are growing almost autonomously, because you're aligning incentives with people. You don't necessarily need to care about all of the small details. So, for example, let's take week one, Tanja. Okay, and we do have the examples of companies hiring, as well as like the new employees that are using it, and then the goal for them is to attract more clients, right? Thus they generate revenue, and then they want also their clients to be using more of their service. So what they can do is maybe setting 6 months period or 8 months period, saying that every client that interacts with our platform or use our service will be eligible for X weekly points based on usage, and some of the points will be also distributed to their users. And then time passed by, those are not only points, those actually are like received to receive a token. And what is a token? A token is similar to a share. Every company in Web2 has equity. For the blockchain world, it's tokens, and most likely, and in all cases, those tokens are actually liquid and listed. No project that has tokens doesn't have it listed. And this even make Web3 moves at a very fast space than Web2. So companies move very fast and get listed much faster than companies in Web2. And typically, it doesn't necessarily need to have that much big traction in order to do it. And this will achieve two things, is that one, it will make people using the platform more. Second, it can also incentivize anyone who can provide value. Let's say, taking another example, application for gym trainers and trainees, right? You will be incentivizing gym trainers, like someone who is good with training, to be using the application more and getting some clients there, as well as you incentivize people who are actually booking those gym sessions or training sessions with those trainers. So this creates, let's say, an application that's constantly growing, because there are incentives for people to be using that application, and even help you to get bigger market share, because people are not using your platform just for the value that you're providing, but they're actually getting the biggest incentive for humans. I mean, the biggest incentive for humans is money, usually. And if you give them money, they'll be happy for sure. You don't necessarily need to print that money from the bank, but you can actually create your own token, create your own currency. And creating your own currency means that you can build your own economy. And
now we have a really cool inspiration for Tanja, how to enter the Web3 world.
Okay.
Thank you so much for sharing that. I think I would love to touch upon something at least quickly before we had to end, because we are nearly at the hour. But I would love also to talk about something which is probably might be different, which is fundraising. So when it comes to fundraising in Web3, we just heard from Rand the topic around token. So token is a way to raise funds, plus also, let's say, the normal VC round in addition. I don't know, maybe Rand, do you want to just quickly share how you are raising funds?
Sure. So we are raising funds through tokens and equity. So investors will be getting tokens and equity. And we've already closed pre-seed. We are currently running the seed, and we'll be closing it soon, opening our public sale. And public sale is an ICO. which is
Mhm.
something equivalent to an IPO in TradeFi and Web2 world, which means اكتتاب في العربي. وهو إصدار يعني أسهم قبل ما تطلع الشركة للإدراج. This will be done on a regulated US platform that we will be announcing about soon.
So
Inshallah.
then I would also be able to buy the token, and I could
Exactly.
also become a shareholder, which would be difficult to do that with WeekOne. Maybe Tanja would let me buy some shares, but
Yeah.
usually this is not something that retail, or let's say that normal, let's say people retail can buy. You are closing the rounds, with bigger tickets, with angel investors or with VC. So just to also address that as a difference. Maybe Tanja, do you want to also share something to that?
Yeah, I mean, fully agreed. It's a classic, let's say, fundraising. So you have equity at the beginning in the business angel round. We work now with convertible loan agreements. So this is more like a loan, but not yet. We are thinking about tokens. Maybe in a few years. Who knows?
Yeah. Okay, but this is a big difference where also you need to think different, and where also you need to create the trust. Rand, I think this is really key that you shared. Also, you need to create the trust in the with many people, with the community, where you also can find where you can create the community, on a long-term trust, which is different in, let's say, the normal or Web2 world when you do fundraising.
Yeah, true. And I think transparency is key for building trust. And yeah, this is the first time that we allow community sale in Quintes history. It's always been like private and closed for angel investors and VCs. And it will be at a higher price than the current seed round. But yeah, not a very higher price. But yeah. Thank you,
Yeah,
Jad.
congratulations to that, Rand, and we will
Thank
look
you.
closely to the next steps for sure. Now we need to come to an end. We are nearly at the hour, and I would like to close it with a question. What advice would you give your younger self that would have saved you maybe 6 months or a year? So just thinking back 1 or 2 years ago, or maybe even 3 years ago, which advice would you give yourself? Maybe Tanja, do you want to start?
Yeah, I would give my advice to start with the sales process earlier. So founders first stick with the idea and the product, and then look at sales in the second part. But sales takes longer as expected. And I would say to my younger self, start directly, address thousands of customers, and start the conversations more at scale. Which then makes the traction faster and easier later on.
Thank you. Rand, what would you advise yourself?
I think one of the major advices, which one of my advisors also told me early on, but I didn't took that into account. He told me like, hire fast and fire fast. You always want to do this, specifically if you see a red flag on someone or they're not doing the best that they can do or performance. The second thing is to actually tie compensation to performance and not time, meaning they need to get the work done in order for them to get compensated. And this also go back to the system of incentives we created. This is how to create a company that autonomously works on success. It's not just managed by one person. It's just everyone is working very well. Because I realized that every year there is around $8 trillion wasted on what? On salaries that are for employees that are not performing well. This is not all salaries. This is just underperformance. So a lot of teams, specifically startups, need to be more cautious about how they actually structure compensation in a way that makes the company actually keeping traction by tying compensation for performance. And then last thing is obviously trust nobody, right? A lot of people try to sell you their skills, whether that's employees or agencies every day. But you know, you really need to choose carefully. There's a lot of fluff out there, a lot of people that will try to sell you things and make you buy from them. But trust nobody. And specifically, if you're in the blockchain, you really need to be careful of social engineers. And you can read more about social engineering in my LinkedIn. And yeah.
Thank you so much, ladies. That was fantastic conversation. Thank you so much. I learned a lot, and I want to share also here from the chat. I truly thank you for this meeting. It's one of the most enriching things I've attended in a long time. So thank you so much. It was for sharing all your insights, and I'm looking forward to see you soon again. Thank you.
Thank you so much, Sabrina and Tanja, for hosting this. Thank you, everyone, for coming in, helping, listening. If anyone needs help or have questions, feel free to message me in LinkedIn, and more than happy to help.
Thank you, everybody, and same here. Have a good evening and afternoon.
Thank you. Bye-bye. Bye. We couldn't hear you, Tanja. We cannot hear you, Tanja.
I said
but you
thank
wanted
you,
to
and it was grateful.
Always.
Yeah.
Okay.
Thanks,
Wonderful.
Rand. Thanks, Sabrina.
Bye.
And Tanja.
Bye.
Bye.
See you soon. Bye-bye.